Hello, everyone. This is Charlie Tian. I'm the founder and CEO of GuruFocus, and very glad to see you again. As always, I'll be here on the first Wednesday of each month at 1 p.m. Central Texas time, U.S. Central Time. And I'm based in Plano, Texas. Let me know where you are, and we seems to let me know where you are. Thank you. Thank you. And yeah, tell me where you are. We are in Texas, and the weather actually quite pleasant. It was cold a little bit before last week for one day, and now it's actually very, very nice. And yeah, tell me where you are and say hello to me. And I always love to hear from you. Okay, thank you, thank you. And from Atlanta, from India. Okay. Oh yeah. And as always, you can ask me questions, any questions actually about the market, about stocks, about GuruFocus features while I'm talking. And I will always go back to the questions and I will address every question as much as I can. And feel free to ask me questions. Eric, glad to see you from Ukraine. Thank you very much for coming, even from Ukraine, and I hope you will do well. You do well there. And okay, yeah, you can certainly start to ask questions, and I will come back to the questions later. And at the beginning, as always, I will introduce what we have done lately and what I think about the overall market. We all know that the market is at the all-time high. It's all-time high at this point. And should what should we do with markets so high? And what should we do? What should we do? And what are the risks? That's what I'm thinking about. So let me share my screen with you. Let me here. Okay. Here you should be able to see my screens here. And okay. Okay, you should be able to see my screen. And you can see this is the GuruFocus homepage. What you see on the homepage might be different from what I see because this page can be fully customized. You can move around different components and to the place where you want to put them. And you can, you can also add and remove, delete components from here. For example, if I want to remove this one, I just click on remove, it'll be removed. And I can add more features, more widgets to this, but just click on this widgets. And you can add general market components. You can add components about your own portfolios. You can add economic data here. We have plenty of those also here. And after you do it, you just click on done, and it will be saved. And next time, when you come to the website again, what you see will be the one that you have customized. And the one actually I pay a lot of attention to, I pay quite some attention to is this SP500 GF value page. And if I expand this chart out, you can see that this gives us a very good overview of the market valuation. And it goes back to about 20 years. You can see that, okay, during the 2008, 2009, market was very much undervalued. And during pandemic, there was a time that market was undervalued. And then there was I think this was a government crisis on something caused market correction. And then there was a 2022, and the market is certainly overvalued at this point. It's certainly overvalued. If we look at the 20-year history, actually over the last 20 years, the market has been more overvalued than any time in history. But now it's really even over the last 20 years, it's among the highest valuation point over the last 20 years. So that's the market risk. I think when it's overvalued, and it will be very sensitive to bad news. And yeah, we're kind of lucky. We're kind of lucky that we don't have bad news since like on the recent re-election of Donald Trump, since we prompt the market even higher. But the market is overvalued, and I'm having a very hard time finding stocks to buy. Actually, I have not bought any stocks for quite some time, and I cannot find stocks to buy. I'll be glad actually if you can find stocks, and let me know if you're willing to share. Let us know what stocks you're looking to buy, and we can certainly analyze it here. We can share our opinions. It will not be advice, but I will certainly be happy to share my opinions. And about the market valuation, I think long-term users will know very well. This is a GF valuation page dedicated to the valuation. The chart I have just introduced. We also developed a NASDAQ chart, so a similar chart for NASDAQ index. If I expand it out, you can see similarly the NASDAQ index is as overvalued as the SP 500 index. And similar index we developed before, the Buffett indicator, which measures valuation, the market valuation with total market cap over GDP. And this ratio now is at the highest level as it has never been. It was never this high, this ratio. And it's just scary to me. And if we consider this, the future market return will be low for sure. The future market return will be low. That's a prediction. And if we look at the similar related parameter, which is a Shiller P developed by Professor Shiller, Robert Shiller of Yale University, the Shiller P ratio is now 38.7, which is 45% higher than the 20-year average of 26.7. So the market is really very much overvalued. And does that mean that market will go down immediately? And I don't think so, because the market crash usually needs some triggers, but it seems like we don't have any triggers at this point. And the economy seems to be doing okay. Yeah, but the market is overvalued. Let me go through the questions for now, and feel free to ask me more questions while I'm talking, and I would love to discuss any topics with you. Okay, Mr. Berger, will U.S. dollar continue to strengthen? How will adjust our investment if so? That's a good question. Actually, I'm not a macroeconomist, but if we consider all the factors, the U.S. dollars, if we think the U.S. economy seems to be fine, but the thing that worries me the most is the U.S. government debt. We all know that the U.S. government debt is now more than 36 trillion, and the U.S. government is paying $1 trillion, more than $1 trillion in 2025 just on interest. And the government deficit will continue to expand. Currently, it's at 7% of GDP. So at 7% of GDP, U.S. government debt will increase by 7% of GDP this year. And next year will be even more, because the interest payment will be more, and the benefits, the entitlements cannot be cut. And Donald Trump is promising more tax cut. So I can see there will be more deficit. And so there will be more debt. I don't know how long this will last. And this is actually the thing that worries me the most. As debt is always increasing at a faster pace than the GDP, the debt burden will grow higher and higher. One day it will collapse. I just don't know when, but it worries me very much. And I think that's the reason why gold is going up. And will the US dollar continue to strengthen? I'm not sure because it's also relative to other countries. And all the countries are printing money: China, Russia, the big economies, China, Japan, and Germany. They're not doing very well. Actually, none of them is doing very well. If you look at the economy, US seems to be doing the best. But the US debt burden is among the highest. The interest rate is also very high at this point. So that interest payment is so high that the debt will continue to increase. I'm not sure if dollar will continue to be strong, but I did buy some gold over the last 2 months. And I never bought gold before. I mentioned this last month. I never bought gold before, but I did buy some gold. For me, it's an insurance. Okay, I saw someone is asking about Bitcoins. I never owned Bitcoin, and I just don't know what that is. I don't know what Bitcoin is. It just to me, I just cannot make sense out of it. I don't mind other people getting rich from that. I don't mind, and I don't still I don't participate because I just don't understand it. Of course, I know all the theories behind it, but I don't understand it. None of the theories seems to be enough to convince me that it will last forever and it will go up forever. I know that one reason people are buying Bitcoin, one reason people are buying it is because the price is going up. That's actually probably the main reason people are buying it. The price is going up, and there also is this company called MicroStrategy. The chairman, I think his name is Michael Saylor, has been issuing new stocks, get cash and buying Bitcoin. Then when the Bitcoin price goes up, the stock will go up. So he has more money to buy Bitcoin. So it's like a positive feedback and continue to drive the Bitcoin price up. But I don't know how long that will last, and I don't know how it will end. I know that Charlie Munger, the late Charlie Munger, said it's a snake oil. I agree with him, but of course, I don't have a theory to prove that it's a snake oil either. The price is going up, and that's enough to drive lots of people to buy it. And that's about it, but it's not for me. Okay, more questions. Let me look. Okay, welcome. Welcome Song Fen from Australia. Also Priven from Canada. Hi, Priven. And okay, Private Toronto, Canada. Okay, and I want to follow. Let me read this question. I want to follow Buffett's method. He said he knew money. He would look only small caps. Okay, yeah. Warren Buffett did say that before, and he once said, I think we have a page on that. Let me share with you that page. It's under our manual of stocks. Our manual of stocks says that it's actually quote Warren Buffett. Warren Buffett said that I could make you 50% a year on a meeting. And he said, I know I could. And I would turn over lots of rocks to find those little anomalies. And you have to find the companies that are off the map, way off the map. So that's the way he did it in the earlier years. He was flipping the page to Moody's manual and to find stocks that off the radar of large funds, and he was very successful with that. But that's why we created this manual of stocks page, where you can download a collection of companies. Each one will have just one page, like the old Moody's manual. and you can flip through it. That's why we create this tool. It covers global market, covers all the different sectors, industries, market cap. You can select, for example, U.S. and small cap, micro cap, even nano cap stocks, and you can download it, and then you can flip through it. For lots of these small companies, the data is not very complete. So they may not appear if you use our powerful all-in-one screener here. They may not appear because the data may not be that complete. But if you flip through it, you have a higher chance of finding them. And that's what Warren Buffett did. But still, I think these days you can find some good small cap companies. Relatively speaking, small cap companies are less expensive than large ones. The large ones have a much higher valuation than the small ones. But of course, there's a risks in with small companies. You need to make sure that you understand what you're doing. You need to. Personally, I always like to invest in companies that are profitable, that has good balance sheet, and has for small companies you want growth also. So profitability and balance sheet and growth. So you want those valuation needs to be reasonable. So when you flip those pages, you need to pay attention to those. And actually, the things I was saying, the different aspects are covered by our Guru GF score. And I think, let me check a stock. I remember one of my speaker used to talk about a company called the symbol is CACI, I think, CACI. It was a small, the market cap is 11 billion. Yeah, 11 billion is not small, but it's small these days. And I think he was talking about this stock, and it went up a lot, then it came down. But still, year to date is still up almost 40%. And yeah, our GF score will cover all the aspects: the profitability, the growth, the financial strength, the valuation, the momentum. And you probably want to find the companies with enough decent GF score, but a small cap. So let's try it with our screener. And now I come to our screener. And if I just want small caps, for example, and we do have a place where it says, okay, market cap in the screener, and we want small caps. Okay. And for example, we want companies that has less than $1 billion in market cap. Okay, here I select 1 billion, and here I select 100 million. So the market cap is between 100 million and 1 billion. And the GF score needs to be big enough. If I ask a higher GF score on 90, and you can see that we actually find quite some stocks. Here I have 27 stocks. And if I look at the chart, and I get some idea how the business are doing, how the valuation is doing. The valuation will be, look at our GF value chart here. And here, this overall score here. Okay, here you can see the revenue, growth of revenue, and the green bars are the income. Yeah, you get some idea. For example, this company, the revenue has been growing, but it seems like the income does not grow that much. And this company, I'm not sure what company that is. Gaia. Okay. The revenue, this company actually has pretty good margin. Valuation seems to be low and very profitable. So it seems to be good. This one, TRMS, what company that is? Transcat. What does it do? Providing calibration and laboratory instrument service. Okay, so it's test and the measurement industry. Usually, this kind of industry is small. The market cap is $971 million. But I actually, if I just look at this business performance chart here, the revenue and the earnings, actually, I like it because revenue seems to be growing constantly. The earnings seem to be growing as well. And valuation, yeah, it's maybe expensive, getting more reasonable. I actually kind of like it. I think it's worth further study. And yeah, that's some examples. If I look for more of this chart, this list, and look at the business performance chart, I like the ones that has good GF score and has consistent performance, more consistent growth. That's why that Transcat seems to be interesting. This one seems to be interesting too. Magic Software Enterprises. Market cap 579 million. So it's a software company and operating segment professional service. Okay, it's from IT professional service segment. Seems to be a consulting outsourcing company. Based also mainly from US and also in Israel, Europe, and Japan. Yeah, I think it's worth further studying. Seems like revenue growing, and probably during the pandemic it grew the most. Then it slowed down some, but very profitable, consistent profitability. I like those. Yeah, I think I just show you a way to how to find those kind of small companies with our all-in-one screener. And you can go even further. Actually, you can, if you want, you think this company is still too big, can go 100 million and between 50 million and 100 million. We have only two stocks because GF score requirements high. If I relax that, we get more companies, but yeah, these are tiny companies. The market cap is less than 100 million. And yeah, be careful with what you're doing. That just shows you how to use our tools to find the stocks. Okay, let me look furthermore. Is this all-time high any different from last 15-year highs? Mr. Berg is asking, yeah, I was talking the market is too high. This time it's even higher, the valuation is even higher than it was before. If we just look at the valuation from P ratio, from the Buffett indicator, so it's actually much higher than before. And we are in a territory that we would never been, we have never been before. So that's why it worries me. And I cannot find any stocks to buy. I didn't sell much, but I cannot find stocks to buy either. Should we ignore the market and look at the individual businesses? Well, in principle, yeah. In principle, we should ignore the overall market and look at individual business. In principle, yes. But when the market is overvalued, individual businesses are most likely be overvalued as well. And I remember in 1998, Warren Buffett wrote an article for Fortune, and that was that was right before the height of the dot-com bubble in 1998. And he was talking about market valuation. He introduced the Buffett indicator at that time. He said the ratio of total market cap over GDP is the single most important factor in terms of the market valuation. And it was high, actually. And he said that some investor will think that the market is high, but I can find undervalued stocks. So even if market crash, my stock will do well. He said that good luck with that. So good luck with that, really. Okay, let's go furthermore. And Marat asking for Nike. Yeah, let's take a Nike. Take a look at Nike. I actually loved Nike. I read the biography of Phil Knight, who is the founder of Nike. The book is called Shoe Dogs. And I love that book, and I still recommend it. If you have not read that book, Shoe Dogs, yeah, read it. It's a great book. It's one of the best book I ever read. Very fun, very interesting, and talking about his struggles and his achievements, of course, at the end. And yeah, feel that. very respectable. Okay, yeah, Nike has not been doing well, and so what's wrong with Nike? Actually, seeing the Jeff scores as profitability is actually pretty good. Financial strength, I think it's acceptable. The growth is a problem. Seems like the company is having a problem growing. If you look at the performance chart, business performance chart, the revenue has been doing okay. But the growth kind of stopped recent years. During the pandemic, it grew better, I believe. But if I turn to a TTM, the trading 12 months revenue and the earnings, the growth has been flat and even declining some if you look at the revenues. And the income is not growing at all. And that's a problem with Nike. So the market is very competitive. And there are so many new competitors. Nike is kind of having a hard place as the largest player in the market, having a hard time to grow. So the stock, of course, as the valuation is low, but is it worth investing? I think really the risk is still high at this point because the growth is a problem. And if the company can turn around, can start growing again, then of course it will do better. If it does stop growing, then the valuation is not that cheap. That's my opinion. I will not invest in it. I don't own it. I will not invest. I love growth. Although I'm a value investor, I love growth. Between a company, I think both Peter Lynch and Warren Buffett said similar things. Between two companies, if one's growing faster with a higher valuation, the other grows slower with a lower valuation, of course, depending on how high the valuation is. And most likely, I will invest in the higher growth companies. And I did lots of studies with the data mining. I found that growth is the one most important factors for long-term stock performance. Profitable growth is probably the most important factor over long term for stock performance. Of course, you have to consider lots of factors. Some companies grow fast now, but if it does not have the economic mode, it may not be able to grow fast, continue to grow fast in the future. Okay, we have lots of questions. Let me go through fast, quickly. Okay, Charles asking, do I recommend any hedging with overvalued market? I don't do it. I know some people do it. I don't do it. The reason is because the cost of hedging is quite high. We will never know when the market will go down. And what I did was I kind of shift more into a less risky sector of the market. Valuation is lower, and maybe growth is not that high, but valuation is much lower in that kind of sector. I made some shift, but I didn't do hedge. I would love it if I know when the market will crash and I hedge it beforehand. Of course, I love doing it. But we don't know when the market will crash, will start to correct. If we don't know, we continue to do it to hedge. The cost of hedging is actually quite high. And if you consistently do that, maybe the cost of hedging will eat into your long-term returns, and it may not work well. Actually, the result may not be that good over long term. Okay, Amit is asking, what about the GRBK? Let's take a look. I don't know about this company, GreenBrick Partners. Okay, what does this do? What does the company do? Business description. Home building, land development companies. Okay, so it buys land and providing construction financing for its controlled owners. Okay, it's seems to be a capital heavy capital heavy company. The growth is good, and financial strength is good. Financial the profitability is good as well. Valuation, yeah, went up. Valuation is kind of high, went up a lot. And okay, the P ratio is only 9. Wow, that's really low. The growth, if you look at the growth still is again similar to Nike. Growth actually well during the pandemic. During the pandemic, then kind of flat, then seems to be start growing again. And yeah, I don't know. Actually, I think it seems to be okay. It seems to be okay. It certainly needs more study if you want to invest in it. And I don't see any issues actually. Okay, let me look at further fintech lender. Okay, Propel. Warren Buffett would be disappointed. Okay, I'm not sure what's that. Which part? Propel Holdings. Let's take a look. Propel Holdings. Okay, seems to be a stock that traded on Pink Sheet. So it's a Canadian company. Yeah, stock did really well. Seems to be a new company. And yeah, we have a very poor ranking to it. Financial strength is poor, profitability is poor. Just looking at this, it's not for me. It's certainly not for me. Usually, the companies had a shorter history, has lots of debt, and I will be very cautious. And I think it needs further studies. Company become profitable. That's a good thing, and the growth is good. Growth is fast. That's a good thing too. But I don't know enough. Let's see. It's a fintech company. Yeah, I don't know enough about it. I think if you're interested, you need to study more. Okay, fleet capital management is commenting Bitcoin is just another financial asset. Can be treated as everything else. Yeah, sure. Yeah, anything is a financial asset. Actually, anything can be a financial asset. A rock can be a financial asset as well, as long as people are willing to buy and sell it. Certainly, for sure. I remember there's a book, Milton Friedman, I think, an economist. He wrote on island that there's no rocks. On that island, there's no rocks, and people find some rocks to use it as currency. And yeah, so rock become financial assets, certainly. And yeah, Buffett said same thing about gold. Buffett bought gold, bought silver before, actually, some gold before, I believe. Yeah, totally went up a very long time. Yeah, I agree with that. And okay, let's continue. When we integrate AI into Screener, AI is already being used. That's a good question, Jan. Thank you for asking that question. We are actually using a lot of AIs. You can see that on my screen on the bottom right hand corner, there's a tab AI. You can ask any question. You can screen companies for you. For example, give me a list of high dividend stocks. So assuming you want to screen for dividend stocks, yeah, it's actually fetching data from all-in-one screener, and it gives you a list of dividend stocks. And if you don't like it, you can just click on Add Filter. It will bring you to different filters, and you can screen from there. You can also go to the screen. I think it has some, okay, just click on here. I think it will bring you to the AI. Okay. It should have a link to a screener as well. Source, hidden yield screener. Okay, it's this one. So click on that. It gives you a list of hidden yield stocks. And you can always screen from that. And we are actually, AI is helping us tremendously, especially with customer support. A lot of questions you ask me, you can ask our AI actually. Here, if you need help with our page, so our tools, you can ask here, chat with us. You just click on chat with us. And our AI will be able to answer most of your questions. The answers are from the questions, actually from the previous answers we responded to the users before. So any questions you ask were probably asked before by our users already. And so our AI summarize the answer, will respond. If it still does not work, and you can transfer to a human support, a chat support from here. Of course, you can also schedule a tutorial meeting with us. You can open a ticket with us. You can also call us. But schedule tutorial or chat with us is a better way because we can share screens. We can do lots of things which cannot be done through phone. So I encourage everyone to use our AI, to use our chat support here. This chat support will be there 24/7, and it will be able to answer most of your questions. Thank you, Jen, for asking that question. Okay, Val is asking, chapter 9 of my book describe mid PIs with minimum. Yeah, okay, that's actually very simple, very easy to do. Let's okay. If I come to any stocks here, I use ASML, which is a semiconductor equipment company, making all the lasers for chip stock for chip manufacturing. So if you want the PS mid PS ratio with minimum PS and minimum maximum PS numbers, it's actually very simple. It's under the template. It's template. If you look at here, I think it's called PS band. If you just click on PS band, it will draw it for you. Okay, it's drawn already. If I just look at the last 10 years, yeah, it draws the PS. It draws PS, high PS, like this middle line is purple. It's mid PS line, mid PS line, and this one is a high PS line. This one is a low PS line, and it's also actually here. Yeah, if you look at the left side menu of the interactive chart, you just click on this. You can just click on that, and it will appear for you. And we have that not only for PS ratio, but also for PB ratio, the price book ratio, and price to operating cash flow ratio. We have all of those, PE ratio as well. Okay, EV to EBITDA ratio. Yeah, PE ratio. We have actually the median, the band, for instance, price the PE ratio here, median PE ratio here. So you can draw it very easily from the interactive chart here. And it's really easy to do. Okay, values continue to asking, interest continue to drop, interest rate, will the valuation go up as well? Yeah, in principle, when the interest rate goes down, the valuation will go up. And but will the interest rate continue to go down and go down as much as it were during the pandemic? I don't think so. How low it will go? I don't think it will go low as it was before, even before the pandemic. And I'm just speculating, okay? The reason is, again, because of national debt. The debt is so much. And who is willing to lend US government at a very low interest rate if the debt is continued to accumulating like that? Who's willing to? If you are an investor, are you willing to? Yeah, maybe it's safe. You always get your money back. Yes, but your money will not worth as much as it were at the time that you lend it to it. And I have been in the US for 20-something years, almost 30 years now. I love the country. And but the debt really worries me. The government debt is really worries me. And no politicians talking about it. None of the candidates were talking about it. And that really worries me. The only person that's talking about it is probably Elon Musk. And he does talk about the national debt a lot. I hope that he will be able to do something. I hope, but I'm not very optimistic. So I'm just trying to do something to protect the assets that I manage. And what else can we do other than vote, other than voting? What else can we do? Okay. We have so many questions. I'll go faster. Actually, time goes so fast. Any valuation okay as long as earning continue to grow? Not really, of course not. Still, there's of course, but a growth company is more tolerant than more tolerant for valuation, certainly. What's your best performing stock performer? Okay. Yeah, actually the Mano Bridge. I'm not sure how to pronounce your name. Sorry if I get it wrong. Yeah, the Good Company Screener. It's actually the one I love the most. It's one of the ones actually. I created that one years ago in 2016. And yeah, Good Companies. This one. I actually love it very much. I created it in 2016 while I was writing my book. And if you read my book, Invest Like Gurus, actually the entire book can be summarized in just a few words. Actually, invest in good companies only. So just 5 words. Okay. My entire book can be summarized invest in good companies only. Actually, just five words. So what are the good companies? And that's a screener for it. This is a screener I created when I was writing my book. And I actually created also a portfolio to track the performance of the stocks that passed that screener. As I think it's here, good companies. Yeah, it's called Good Companies for the Book, August 5th, 2016. It's here. It was created on August 5th, 2016. And yeah, that's the stocks that appeared from that book. Consider that some shows that very low returns, very big losses. The reason is because the stock was bought. The company was bought by others, and we had very good returns actually for those transactions. Then I never rebalanced this. It said I lost 100%. It's actually okay. Price change since transaction. Actually, not. It's not lost 100%. Price change since transaction. We should look at this column. Okay, some gain 800%, 400%, 200% some, and 2 about acquired. Actually, this one company, Dotcom, was acquired. So that's why it seems like we had loss. Usana, that seems to be the only company that had loss, still trading, seems to be. Okay. That's the list I created. And they actually, if we correct the calculation because some delisted or not updated, I think it did much better than the SP 500. Yeah, that's a good list. That's a good list. It's under screeners and good companies, and that's the screener I created in 2016, and I still love it. I still love it. And actually, what I will do is I will create another one right now, and we'll start to track performance. Actually, create another list. It's easy to do, and I'll show you here. We just click on Add to Portfolio. So I give the name Good Companies List, December 4th, 2024. Okay. So I generated from Good Companies Screener. So I just do that, and we'll start to track some performance. Okay, the performance is now, the portfolio is now created. And if we come to that portfolio, it will load here. And yeah, that's why it's just two companies. It should be, it's not created correctly. Good companies. Somehow it's not created correct. Let me try again. Good companies. 2024. The size view portfolio undefined right now. Yeah, we need to look at this. Somehow that seems like we're having problem creating portfolio. Okay, I'm sorry about this, but that's the way of doing it. We'll fix that. Certainly, we'll fix it as quickly as possible. I'll fix it. Sorry about it, but that's the way of doing it. I will still create that portfolio today, and we'll start tracking the portfolio. That here. Okay. We've got lots of questions. We seem to not have lots of time. I will do it quickly. Okay. Wow, we have so many questions. Okay. Okay. Do we put an alert that was? Do we does the application have any feature that alert us when there's breaking news such as UNH story today? I'm sorry, I'm very sorry about that. What happened to United Healthcare CEO today? And I do own that stock, United Healthcare CEO. We own the stock, UNH. And the stock, the CEO was shot in New York. It's unbelievable. He's only 50 years old. It's really unbelievable. Things like that happens. And I don't know. Of course, we don't have more information on that. The breaking news, the alert, that's something I should mention as well. We do have an alert feature. And the alert feature will actually alert you about prices, about valuations, about everything. Actually, you can add alert here. All the parameters we have been talking about, valuations, profitability, the growth, you can actually do a lot more here. And the news, it'll be under events. It'll be under news events, but we cannot filter by the news like that, like breaking news like that. We can only give you a general news. I believe that that event will be in our market today email. I'm sure it will be in, but that's just shocking. That's just shocking news, and it doesn't happen. Fortunately, it doesn't happen that often. We don't have a alert for that specifically. Okay, John Clark is asking, GuruFocus has a feature to show earning revisions. We do have a forecast page. It's under forecast here. Yeah, here you can see the earnings revisions, the forecast revisions, the history actually is under here. Forecast trend overview is under the forecast tab of every stock. You can see that the earnings per share, revisions over the last 90 days, like last 60 days, 30 days. Seems like for United Healthcare, the earning per share has been revisioned lower. The revenue also revised lower too. And dividend does not change. So that's actually revision here. And probably we can add alert about this. I think we should be able to add alert about this. But that's a revision. If you're looking for, that's a page. Okay, North asking stock prices, real-time prices. No, the stock prices are not real-time prices. They're delayed calls. And the real-time prices will be extremely expensive. It's not, I don't think Yahoo Finance is real-time either. Even if it is, it's actually probably just from one of the exchanges. Okay, Charles Anderson asking, what's the prime determines for the GF value? The prime determines of GF value. One is the historic valuation I mentioned before. I think the company, the stocks are traded at a certain valuation for extended time. There must be a reason to it. The market is relatively efficient over longer term, like 3-5 years. The market is relatively efficient. So we look at the historical valuation of last 5 years, and we also look at future growth for the GF value estimates. And we tried actually, okay, this is the 20th year of GuruFocus. GuruFocus had been, I started GuruFocus 20 years ago. I can't believe it. It's already 20 years. Over the last 20 years, I observed and back-tested and data mined a lot of valuation methods. And I think the one we have now, GF value, works the best. And works for most companies, and it works the best. And I do believe. Recently, I've revisited this topic recently as we will develop a page called valuation. It will be added as one of the tabs. It's called valuation, only talk about valuation. And we'll have that added. And for that page, I revisited the valuation, all kinds of valuation methods. I still think the GF value is the one we're using is the best. Okay. Yeah, I found ground value is very far off from lunch value. Yeah, of course, ground value is more conservative. Ground value is a simple, if I remember correctly, it's usually very low. It's very conservative, and that's ground value. How it's calculated, I actually forgot. Let's ask our AI. How ground value is calculated? We have a formula for that. It's a square root of book value times earnings. Square root of book value times earning per share times 22.5. That's square root. That's how GMF value is calculated. If you look at this beautiful formula here, generated by AI, and if you look at this, it does not have any factors about growth. So it's a very conservative way of current earning power and the assets value of the company. So actually, it does not apply to modern industries. It works for industrials with heavy assets and earnings, slow growth. Work probably okay. But lynch value does consider growth of the company, and lynch value use a growth rate times earnings per share to calculate. So that's why lynch value is usually much bigger than ground value. Okay. Okay, Mr. You said that you love everything we produce. Thank you very much. Actually, I'm not, especially these days, I'm not the one who is producing it. Our people in our companies are the ones who are producing it. And they're really hardworking, very responsive to a customer's requests on features, on bug fix, and our employees are the best, really. And I'm not doing that much actually these days. I used to work more, but it's 20th year now. Okay. Yeah, Verizon. Okay, Verizon is a value trap we set. Let's take a look. Verizon. Yeah, at 20, the P ratio is 18. It's a value trap. The reason why it's a value trap, I think the reason is ultimate Z-score is 1.8, 1.18. The ultimate Z-score is too low. When it's this low, the financial strength is just so poor. The company just has so poor financial strength, so much debt yearly, and the debt payment, interest payment is such a large burden. Just look at this. There's no growth. The debt, the red bars, and the green bars, the cash the company has. Okay. So the debt is so much higher than the cash. So I'm not saying that Verizon will be bankrupt in like 2-3 years. I don't know. But the risk is just so high. The company just has so much debt. And so it's something we want to avoid, especially it has no growth. Why you want to invest in it? Yeah, for the dividends, probably. The only reason you invest in it is for the dividend. The dividend rate is really high, 6 point. Dividend yield is 6.29. That's high. That's really high. But the company has no growth, and if even the dividend is this high, if you look at long term invest, you're still losing money. It's last 10 years. Most likely you're still losing money, although the dividend rate is very high. Why you want to invest in it? Okay, Philip is commenting he does not believe market is efficient over 5 years. Yeah, maybe. I cannot argue with you on that. We don't know. It can be, it depends on what kind of industry, what kind of market. I think it depends on lots of factors on that. Yeah, I cannot argue with on that, but if a company is traded at certain valuation for 5 years, I think that might be a reason to it. We should probably adjust our model to accommodate that, and otherwise we'll always be out of the market. That's what I'm thinking. Okay, DAC. Let's see DAC. Dan knows. I don't know about this company. What does it do? As owner of container ships. Okay. International seaborne transportation. To be honest, I don't like this kind of industry. It's just so cyclical. It's so cyclical. It makes lots of money during the pandemic. Stock went up so much. Then after pandemic is gone, it comes to the reality. And I don't like this kind of company. And of course, if you're lucky about it, at the beginning of the pandemic, you make lots of money. But I'm not good. I'm not good enough to catch those kind of trends. Some good trends. Okay. Some good trends. Some good trends. Some good trades. Okay, some good trades. I will still come to our all-in-one screener and look at least the good companies. I think that's the way of doing it. That's where you can get started. We have a similar one, okay, high quality, which actually similar, maybe some slight modification, and they will give out quite some similar list actually, and that's some place to start, to get started. And our all-in-one screener is always a great place to get started for some good stock ideas. As long as you know what kind of stocks you're looking for, you can always find it with our all-in-one screener. Okay, thank you, Private Toronto. Thank you very much for your comment. Yeah, James is great, and he's really very smart and responsive. And Thank you all for coming. Our next meeting will be January, it will be on January 8th, actually. It'll be January 1st is a holiday. So it'll be on January 8th, 1 p.m. Central Time. This month we'll be celebrating our 20-year anniversary. And I can't believe why I started 20 years ago. I couldn't believe that I would be still doing this after 20 years. Actually, I still love doing it. I still love it. I can see now. I can see I will be doing this for another 20 years, and which I couldn't see 20 years ago. Thank you all. Thank you, Mister. Thank you very much. Happy New Year and Merry Christmas to all. See you next month.